We all want to know what the future looks like for gold and silver. However, it's scary when we listen to the CEOs of some of the world's largest banks. Yes, Goldman Sachs, Bank of America, JP Morgan. All three of their CEOs have said something in the last few days which is terrifying regarding the future of the economy in the United States. But what does that mean for the silver price? What does that mean for the gold price, the value of the metals? We're going to dig into that in this video. Also, big warning, our old friend Jerome Powell will be speaking in just about 1 hour. That could send reverberations through the general markets and, in particular, through the gold, silver, and platinum markets. If he says something that's hawkish, if he talks about we may need to raise rates, that will be bad for the markets. That will be bad for the value of the precious metals. Short term, remember, this is all short term. But, however, if he's more dovish, if he hints at the fact that maybe they're done raising interest rates, that could be very, very good for the price of the metals. Now, I'll go out on a limb and don't make any bets or any financial type decisions based upon what I'm about to say, but I will go out on a limb and I bet that we'll have a green day in the silver market and the gold market by the end of the day, because I think the Fed is getting painted into a corner right now. The economy is slowing down at a really, really fast rate. And at the same time, we have all this geopolitical turmoil going on everywhere in the world. Israel, Ukraine. Don't forget about China and the Asia situation as well. Don't forget about the situation at the border. You know, I was just talking with Peter Grandich. If you don't know who Peter Grandich is, I recommend you look him up and learn about him. petergrandich.com. He has nothing to sell you. I get no commission if you go and check out his website. He's just a great guy who has decades of experience with the markets. And he's always very kind and generous to give me some of his time. I'll have an interview video that I did with him coming out here in a few days, but he was considered the Wizard of Wall Street back in the 80s. He's been on CNBC. He's been on Good Morning America. He's been on almost every major news channel, has done feature stories about him. And he's also in Ron's basement. But we were talking, and you know, it kind of dawned on me. We were talking about what's gone on, and you know, since the 80s, and then even in particular, what's gone on in the last 3 years. And you know, he mentioned, right, and I mentioned, right, we have war in Ukraine. We have war right now in the Middle East. We have a very volatile situation going on in China. But he brought up as well, we have a crisis here in the United States at the border. I mean, all this has been going on just in the last 3 years. It's a very, very scary kind of macro geopolitical environment that we're in. Now, I know you're going to hear the old story from Ron again, but that's why I choose to own silver. I don't own any physical gold, but I own a lot of gold mining stocks. That's because I feel like they are a good hedge, a good insurance policy against what feels like a lot of pure craziness going on in the world. I asked Peter, all right, I said, if we could go back and talk to that 1987 Peter Grandich and tell you what was going to happen over the next, 35 years, would you have believed me? He said, no. He said, we couldn't even fathom what $1 trillion was back then. Let me give you an example. And our friend Pat Holland, who's on here, he has this concept called nominal confusion, right? Like $100 bill is always a $100 bill. It's, to me, valuable now, right? And it was also valuable 20 years ago, but it's not as valuable now in real terms. In nominal terms, yes, it still is, but in real terms, it's not. But let me give you an example. Right? Let's say 35 years ago, $1 trillion seemed, nobody could really fathom what $1 trillion is. It's probably real similar to what we hear. What's after $1 trillion? I think most of us don't know. I could be wrong, but I think it's called a quadrillion, right? That's like somebody telling me that in 30 years from now, when I'll be a young, sprightly 87-year-old in my basement communicating with you, my fellow basement dwellers, right? 35 years from now that we'll have a $90 quadrillion debt? I mean, it doesn't work. What's going on right now doesn't work. The math doesn't add up. And you can watch this interview I did with Peter Grandage, but, we don't want to be negative. We don't want to be doomsayers. But man, if you objectively look at what's happening right now in the world, it is downright scary. Let's just hit on some of the highs. Look, let's look at the gold price right now. 1,940.50 per ounce, the spot price. Guys, that's good. We are within, I hate to use this term, spitting distance of a new all-time high. And how many times have we talked about when we get to an all-time high in gold measured in U.S. fiat unicorn fart dust dollars? I believe we're going to jump right from that 2,100 range to 2,600. You better hope I'm right, but if I'm wrong, you can hold me to it. Just like my prediction today about after our old friend Jerome Powell speaks in New York City at 12 noon Eastern, that's going to move the markets, and I think it's going to be good for the silver and gold price, but I could definitely be wrong. Silver, $23 per ounce. Okay, so they're holding in there. They're holding in there. The gold price is behaving a little better lately, right? Probably more due to the geopolitical flight to safety function that it's performing. And as we've talked about, right, in terms of flight to safety products that people can go to, gold and silver are becoming more and more attractive to more and more people throughout the world. But what is going on with interest rates? Does the Fed even need to raise interest rates? Because the market is taking care of it. Guys, the 10-year bond yield right before I came on is pushing up against 5%. 4.96% was the last I saw. This is going to cause major problems in the banks. Maybe that explains why the CEOs of the three biggest banks put out basically doom predictions, which we are going to get to. I'm going on, and I'm rambling today, but we're going to get to these doom predictions from the likes of David Solomon from Goldman Sachs, Jamie Dimon from JP Morgan, and of course, Brian Moynihan from the Bank of America. But we got to remember something about these 4.9. Do you know yesterday the average rate on a 30-year mortgage went over 8%, the first time since the year 2000? Real estate is very likely going to have a crash, right? Right now, what's happening is there's so few buyers, so few sellers as well. So the market found a new equilibrium at a very much lower volume level. But as soon as people start losing their jobs, for instance, right, or inflation gets to the point where they can't even make the house payments on their 3% mortgage rates, and there's a supply of houses that come onto the market, we're going to see across the board potentially major issues in the real estate market. And I hear that in places like San Francisco and some of these bubble-ish type cities, we've already seen 20 to 30% decreases in the prices of homes. It'll be interesting. I don't get this, and I'm going to go off on a little soapbox, so don't get mad at me. Don't you get mad at me here. But I heard yesterday we're talking about giving $100 billion in aid to Ukraine and Israel. And then I also heard that we're going to give $100 million in aid to the people in the Gaza Strip. And look, I'm against war. I say that everything. I don't like war. Nobody talks about peace. Why doesn't anybody talk about peace? How come in the last 20 years, all we hear about is war, right? Afghanistan, Iraq, it's all we talk about. Nobody talks about peace. I'd really like for somebody to talk about peace in the world. It'd be a much better place. But nonetheless, isn't it strange that we're giving money to one country that's going to help them attack another country, but then we're going to give money to that country to help them deal with the fact that they've been attacked? Why are we involved in this? And I have a further question, and I will go off quickly. I heard a guy from Australia just ripping into the United States about this last night. Okay, this guy, he's a YouTube, a fellow content creator, Mike somebody. Anyway, he was like, what's the United States doing? He's like, they can't even provide health care to their citizens. We're the only country in the world where like people go bankrupt. It's, from what I understand, the number one reason for bankruptcy in this country is healthcare. I was dealing with health insurance. I have a family. I was dealing with it last night. It's a nightmare. Everything is screwed up. Except you and me, right? You know what my dad used to say? He used to say, I'm starting to think the whole world is messed up, but he didn't use the word messed. He used the word that started with the letter F. I'm starting to think the whole world's messed up except you, basement dweller, and me, and I'm starting to wonder about you. Okay, enough of that. We're going broke. We're going broke in this country. Watch the interview I did with Peter Grandage, and he's brought up a great point. When it comes to these interest rates and the unbelievable amount of debt we have in this country, Peter Grandage basically said the reality is nobody wants our debt anymore. We're going to wind up like Japan, where the Fed has to print money to buy debt, which I think they've done that in the past already, but that's going to wind up being the only option. They're diluting everything. What does that do for the price of your silver and gold? Guys, I'm not giving financial advice, but when it comes to protecting wealth, when it comes to protecting our families, I still cannot emphasize enough that I feel like silver and gold, to one degree or another, everybody's different, has to have their own comfort level, are the way to go. Doom and gloom from the big banks. Are you ready? Okay, I got to ring the bell. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Thank you for the thumbs up. Hey, I'll beg you, ask you a favor. If you're not subscribed to the channel, would you please consider subscribing to Ron's Basement? When those numbers go up, that helps me feel good and more motivated to get more content out. I talk about silver, gold, the market, how we can prepare ourselves, and I do it on a daily basis. So if you subscribe, and that's free to do, you can come back every single day. What are the big banks? What does it mean when the top big banks, these are the biggest banks in the world, are saying some not very optimistic things about the world? Let's slow down. Let me talk in my bedroom voice with you now. Let's listen to what Jamie Dimon from JP Morgan Chase. Yes, that JP Morgan Chase that manipulates the price of silver and gold. That JP Morgan Chase, right? The one that some people say is like a new section of our government. I don't know. I'm not going to go there. But what did Jamie have to say? Okay, I'm going to quote Jamie Dimon. He said, "My caution is that we are facing so many uncertainties out there, so many uncertainties, advising people to act prudently given the myriad of risks facing their portfolios." His comments echoed his warning in JP Morgan's earnings release, where he said, quote, "This may be the most dangerous time the world has seen in decades." The most dangerous time the world has seen in decades. That's from J.P. Morgan, the J.P. Morgan. Jamie Dimon's like the biggest banker in the world, basically, telling you. That's not me in my basement telling you, oh, you better. That's not our friend Peter Grandage saying, oh no, you better. Things aren't right, guys. It's not Lynette Zhang, right? It's not Andy Schectman. No, this is Jamie Dimon from JP Morgan Chase, who's paid to be optimistic. Think about it, right? I mean, isn't that right? The CEOs of companies have kind of a positive tilt. He's telling us that it is the most dangerous time the world has seen in decades. We know what's going on in Israel. We know what's going on in the Ukraine. We know what's going on in Asia with North Korea and China. We know what's going on the border. We never talk about that here in the United States, an invasion of people from other countries. We know what's going on in our cities. I live in St. Louis. Hey, look, I love this place. I grew up here. I lived in Chicago for 6 years, but the rest of my life has been it is darn right scary in the cities. Read about what's going on in San Francisco. Read about what's going on in the urban cores of these cities. It is not a pleasant situation. Okay, let's move on to Goldman Sachs. What do you say we go to Goldman Sachs? Maybe not the largest, but certainly the most sophisticated bankers in the world. Now, all these guys are above the board and wonderful, high-quality people that are always looking out for the well-being of their clients. Remember that one from, it was like 8 years ago? There was some recording that was made of the Goldman Sachs people talking about their customers, and they were referring to them as the Muppets. Anyway, David Solomon from Goldman Sachs. Listen to this, and we talk about this. What does this mean for silver and gold as we process this information? David Solomon says, quote, "I'm still of the belief that there's been a lag in the Fed tightening," he said. Quote, "I do think over the next 2 to 4 quarters, the impact of that tightening will be more evident and will create slowdowns in some areas." We've talked about this, right? The Fed raising rates at the fastest rate that they ever raised it. Okay, they're not the highest they've ever been, but it was the fastest, most extreme period of interest rate hikes, that there's a lag effect. It's kind of like if you go to the doctor and you've got a big, sore on your arm, okay? Or something like that, your armpit, I don't know, whatever. Imagine whatever you want, and the doctor says, "Ooh, that's nasty," and gives you a prescription for antibiotics. There's a lag effect. You don't take the antibiotic and suddenly start getting better. It's the same thing with the interest rate hikes. There's a lag, 6 months to 12 months to 18 months for the effect of the interest rate hikes to filter through the economy. And we are probably right now just in the heat of it, just in the middle of it right now, and still have, I would say, at least 6 months to a year of more negative impact from these rate hikes. And are we seeing that? Right? I told you I was at a party over the weekend. I talked to an executive from one of the world's biggest shipping companies, and I said, "What's it like?" He's like, "It is slow, baby." Right? Whether you're talking rail, whether you're talking trucking, whether you're talking those big, however you refer to that, the big giant 40-foot shipping containers that they stack on ships and ship across the ocean. All of it is, I'll say crashing, absolutely crashing right now. Okay? And it's not going to get any better. And sure, they're going to say, "Oh, the GDP is wonderful." Well, yeah, but that doesn't factor in inflation and how now the actual volume of activity in the economy has dropped precipitously. Let's go over to our friend Brian Moynihan from Bank of America. Big Bank of America. What does he have to say about the U.S. economy? All right, let me point this out. Well, I'll come back to this, okay? It says, this is from CNBC. It's a message now echoing in every corner of Wall Street. Consumers have finally run out of steam. The U.S. economy is based on the consumer. That's a known fact. That's a mathematical certainty. The U.S. economy relies on a strong consumer, and they're saying the consumer has run out of steam. It's also an eventuality that Bank of America has predicted since March, when analysts warned that the Fed would push consumers, quote unquote, to the point of pain in order to tame inflation. And now, according to Bank of America's Chief Executive Officer, Brian Moynihan, that time has come. He was speaking to CNBC's Squawk on the Street. Moynihan said that the way consumers are acting is consistent with low growth, low inflation economy. Guys, everywhere we look, those are the CEOs of the 3 biggest banks: Bank of America, JP Morgan Chase, and Goldman Sachs. What are they all telling us? They're all telling us negative. Why is that a double, triple kicker negative? Because these guys are paid to be optimists. So what they're saying and what's actually going on is actually probably even worse. Now, let's touch on something that also came out regarding Bank of America and big bank trouble possibilities right now. They also reported that they have 132 billion, not million, billion in unrealized losses in the last quarter on their balance sheet because interest rates are going up. That means the value you gave your money to Bank of America. They took your money, paid you 1%, and they bought a bunch of bonds. They gambled with your money, betting that they could buy bonds that would pay them more in interest than they have to pay you on your deposits. Those bonds have crashed in value, okay? Big deal, okay? And now Bank of America, they're not reporting it, but they're recognizing they have over $132 billion in unrealized losses. We could have a major banking crisis in this country. If people showed up and asked, that means if people showed up and wanted all their money out of Bank of America, I'm not recommending you do this. But if everybody showed up and wanted their money out of Bank of America, they wouldn't have it, because if they had to sell those bonds, there's just for that example alone, there's $132 billion loss. Of course, the FDIC would cover everything. The Fed would just print magic unicorn fart dust money out of thin air, and everybody would be whole, right? Yeah, they'd be whole with even further diluted dollars. This whole system, whether you're looking at the banks, whether you're looking at the country as a whole, with 33, 34, who knows, maybe it's $35 trillion. Can we get 35? Yes, right? No matter how you look at it, the only solution, because of poor, short-sighted decisions by executives, by leaders, is to dilute. Okay? So, as we look at that through the lens of precious metals, you can't dilute silver. You cannot dilute gold. You cannot reproduce it. You can't print it, right? They've tried, sure, there's electronic gold. The COMEX, right, creates 250 make-believe magic ounces of silver for each real ounce of silver that they have in their warehouses to back up all the paper, electronic unicorn fart dust. Thank you, Craig, for that super chat. Contracts, right? Guys, but at the end of the day, the true value of the metals will be realized. I had one of my subscribers, our subscribers, and thank you to all the subscribers. And if you don't mind, it's my one time of the video. Please give this a thumbs up. It's a nice gesture on your behalf. Find the thing that looks like my ugly thumb, and if you press it, that helps get this word out to more and more people. So thank you, and thank you all for being here. This is all about us, okay? This is a group. We get a lot of the same regular people who show up every day, and I appreciate you being here. If nobody showed up, I wouldn't be doing it. I think that we have a lot to share with each other. I know you have a lot to share. Leave a comment in the comment section. I believe you do have to be subscribed to the channel in order to leave comments. But you guys, there's so much learning and camaraderie and friendships, to be quite honest with you, that have developed through this group of people, right? It's not RonTube, it's YouTube. So thank you for being here. One of our subscribers, easy for me to say, Eric, sent a very interesting email to Susie and I regarding Bank of America. And this is interesting. Apparently, Bank of America has loaded the boat with TLT. What is TLT, you may ask? Some of you may have heard of it. TLT is an ETF that tracks basically the 20-year bond yield. It has crashed. I've heard some people say it's down as much as 50% in the last year and a half, right? Safe bonds. TLT is a safe thing to put your money in until you lose 50% of your money in TLT, which is what a lot of people have done. But apparently, because Bank of America is loading up. Thank you, Tony. Thank you, my friend. Party on, buddy. That's right. Bank of America loaded up on TLT. That's an indication that they think the Fed is going to cut rates sooner as opposed to later. Because if the Fed cuts rates, the value of TLT will go up precipitously. Can you use that word on the positive side? Heck, I don't know. It will go up significantly. So that's a very interesting thing. Again, here in just a few minutes, we're going to hear from our old friend Jerome Powell. He is going to move the markets, right? I don't think it's going to be a middle of the road type speech. It's going to be one way or the other. And it can have serious ramifications on the metals prices. So buckle up, buttercups, right? It's going to be an interesting remainder of the day. But we know, I mean, that's one thing that you can say as a precious metals investor. If you've been in this for a couple years or a couple decades like I have, we can deal with whatever they throw at us. I was up in Quebec with some big analysts from a lot of the big Canadian banks, and he was talking about his mining stock portfolio. He's like, yeah, it went up in value like 3 times and went all the way back down to where it is. And he was like, I don't even look at it anymore because it's depressing, which I understand because I'm kind of there with him. He said, but what I take solace in is just I know what I own is value. And I think, can you say that about however you invest in this sector, whether it be physical silver, physical gold, physical platinum for that matter? Maybe you buy gold backs, I don't know, whatever it is, or the mining stocks. I mean, the mining stocks have unbelievable value right now, okay? But you know what you hold. And you know what? That's a good time for me to say thank you. Talk about a mining stock. First Mining Gold sponsors Ron's Basement. It's a stock that I've owned for years and years. I'm not giving financial advice, but I feel like it represents an outstanding value right now. Millions and millions of ounces. In total, almost 13 million ounces of gold in the ground in Canada. They're a development phase company, so they're moving through this process of getting permits. Check them out. And if you want to talk to somebody at the company, reach out to Paul Morris. I'll put his email address in the description of this video. So we know what we have. Here's something nobody's talking about. What impact do you think the presidential election next year will have on the economy, on the price of silver and gold? I'm not hearing anybody in the precious metals community really start to recognize this yet, but we're almost just a year away from the presidential election. I think there's 2 big things to consider. Number one, thank you, Ron. Cowbell. Oh, yeah. Thank you. That's for 200 thumbs up. Thank you for the reminder, and thank you for the super chat, Ron. That is awesome. Nobody's talking about the big election next year. What impact could that have on the markets and the precious metals? 2 big components to talk about. Number one, what's the word? Uncertainty. We have got major conflict in this country internally between the political parties, political divide, political vileness, if that's even a word, but vile behavior on both sides, extremism on both sides. And we are heading into, in the next 12 months, a presidential election cycle. I think that could create a lot of uncertainty. So the flight to safety bid support for the metals could be impacted by that in a positive manner. Now, the other thing to consider is that in an election year, there will be massive pressure placed on the Fed to be easy with monetary policy, to do things that will stimulate the economy. Not that they've not done enough already, right? We're already spending $1.4 trillion per year than we bring in, but even additional measures will likely be taken. And again, that will do nothing but dilute the value of the currency, dilute the value of the dollar, and it's already being diluted. Okay, the machine has been started. We are in the dilution zone. What do you think that's going to do for the price of the metals? It will only serve to be even more supportive. I'm going to hop over to the comments and see how everybody's doing. Wow, Annie Oakley, guys, please do me a favor, type 6 to say thank you to all the moderators. They do a great job and make this possible. So if you could type 6, that would be super nice. Hey, my friend Pat Holland's here. Sassy Silver. Thank you. Thank you for the 6, Pat Holland. I think it's about time we have Pat Holland back on. Maybe we can schedule something for next week, huh, Mr. Holland? The Lone Ranger, Ron McAdams. Not with all. Alvin, wow, look at all those. Thanks. CoinShop Chris, thank you. Jim M, thank you. Thank you. This is a community and is not possible without, the help of our awesome, awesome moderators. All right, guys, thank you for being here today. I will be back tomorrow. Okay, we'll see. We'll see what we got going on. Looks like Pat Holland says he'll come on next week. Okay, take care of yourself. Number one, right? Be nice. I know you all are nice, and I'll look forward to seeing you tomorrow. Thank you. Thank you. Thank you.